I think both the developer as well as Blackstone said, here's an opportunity. Do you want to run the REIT? And it took me 30 seconds to kind of decide. While REIT is a very established product globally, it took us a lot of effort during IPO roadshows to explain to global investors what is the India opportunity in the context of REITs. Right. They understood REITs very well.
We were both together in Blackstone at the time, and our portfolio became so big that the only way to exit then was through a REIT, because no one was willing to buy billions of dollars of assets from us. So
I would say anything which is governed, it's better than what's not governed.
Right.
SEBI obviously did a commendable job and went a lot ahead. The REIT pretty much made perfect sense.
Now let's talk about the listing itself. I know it was a big affair, the first listing, you were right in the thick of it. How's your experience, road shows, and then meeting all these investors and then trying to raise money? That must have been a pretty satisfying and exciting few months.
Absolutely, it was a hell of a roller coaster. Our pitch was that the REIT is not a real estate play.
Yeah.
The Indian REITs are a play on the tech talent. End of the day, I think one, it was a very satisfying experience raising that money in a challenging environment at that time.
Yeah.
And two, setting up the first of its kind REIT in India and the first product. And within 8 years, Blackstone actually from one asset, it acquired roughly 55 properties.
Yeah.
So from 0 million square feet, by the time I moved into Embassy REIT, we managed about 165 million square feet. So roughly 1/3 of India's office stock. So we really had more and more large companies globally are offshoring work to India, not outsourcing. They're offshoring, which is they're setting up their own centers in India, whether it's a JP Morgan, whether it's a Morgan Stanley, whether it's a Google. I would say Bangalore is the best office market in Asia.
Yeah.
And today, given the rising interest rate environments, the prices are the stock prices have really been impacted. And that's why you can access these opportunities at 30-40% discounts to the intrinsic value. And I think that's a phenomenal opportunity.
Real estate investment trusts, or REITs as they are very popularly known, have been a very popular way to invest in rent-yielding real estate around the world, especially in the developed markets where REITs were first introduced in the 60s. Since then, REITs are now a $1 trillion industry. But in India, it's a more recent phenomenon. The first REIT regulations came around only in 2014. And the first REIT, which was sponsored by global real estate fund Blackstone and Bangalore-based developer Embassy Group, listed in 2019, now 30,000 crore market cap REIT. But other than that, we've also had two others after that, one sponsored by Brookfield and another one by Blackstone. And there's a fourth one which just got listed as we speak, but in the retail space. The three office REITs together manage close to 200 million square feet, primarily office assets in the country. Welcome to this episode of the PropShare podcast, and today we have with us Vikaash Khdloya, who's been someone very closely associated with the real estate investment as well as the REIT industry. And he's someone who's not just a professional in the same industry, but also an ex-colleague where we worked for many years together in Blackstone, and then also a very dear friend. Vikaash started his real estate career in Piramal Realty, where he was investing in primarily residential real estate, which was the flavor of the season back in those days. And then he joined Blackstone in 2011, and he was there for close to 8 years, becoming a managing director in the fund, before finally transitioning to the Embassy Office Parks REIT, which was the first REIT listed in the Indian stock exchanges, first as the deputy CEO and now, of course, the chief executive officer running the REIT. Vikaash, thank you so much for coming, and welcome to the podcast.
Great, thanks, Kunal. Good to be on the show.
Yeah, thank you so much. Now, you've obviously seen REITs very closely from the time the regulations were drafted to how it changed and so on. Tell us something about how the regulations came around. Why did we need REITs in the first place? And what you saw in those initial years?
Yeah, so REITs just generally, as you mentioned, it's a $2.5 trillion asset class in the US.
Wow.
So it's a pretty well established product. In India, of course, 2014 was the first time when SEBI came up with the draft regulations. And essentially what REITs are trying to do is they own an underlying portfolio of cash generating assets. In this case, it's office assets in the case of Embassy REIT, but it could be malls, it could be residential REITs. Again, this portfolio offers stable, predictable cash flows.
Right.
And again, the whole concept is REITs are not necessarily a developer entity, but they're more long-term asset owners. They own, they grow, and they finance these properties. And again, they get dividend yield, and also they target growth, whether it's organic through growing the rents or growing the area under management,
Right.
or through acquisitions.
Right.
So what happened when SEBI came up with these regulations? Of course, it needed to be ironed out from an Indian context. They modeled it against in accordance with the Singapore REITs.
I see.
So Singapore follow what we call as an externally managed REIT.
Okay.
So the management team is external to the REIT, the public entity itself.
I
unless
see.
what you see.
And that's not how it is otherwise?
Yeah, in the US and in other regions, it's internally managed where there's full alignment.
I
Where
see.
the management team, the entity which is earning the fees, also within the REIT
yes,
itself,
now
the public entity.
like even the Ascendas India Trust used to be managed by the A REIT or something, which is
Exactly.
I see. Okay.
But it's Singapore is all externally managed, and that's what they modeled India on. So obviously the regulator has done a commendable job. India again had a lot of scars on the residential real estate
Of course,
from the
yeah,
early
yeah.
2005, 2007 IPOs. So I think they went extra conservative, but it took us about 4 to 5 years to kind of engage with the regulators and iron out some of the regulations to ensure it's in a form where we can actually go ahead and list. So
Right.
it was a journey. And at the same time, of course, we were bulking up and building the portfolio.
Yeah.
So the stars got aligned sometime in 2019,
Right.
and Embassy REIT got listed in April 19.
Right.
Now, ironically, while REIT is a very established product globally, it took us a lot of effort during IPO roadshows to explain to global investors what is the India opportunity in the context of REITs.
Right.
They understood REITs very well, but that was quite an experience of how to explain them that unlike globally where REITs are predominantly a yield product, so
Yeah.
they give a fixed return fixed investment kind
Right.
returns, but in India it's a yield plus growth product
course,
because
yeah.
the rents are below market, you're seeing the rents grow, you're doing a lot of development. So that was a journey, and again we raised about 4,750 crores in April 2019
Wow.
and got listed. So that's
Right.
been
Right.
quite a journey.
And a lot of this REIT regulation was driven by, private equity funds, wasn't it? I know we were both together
Absolutely.
in Blackstone at the time, and our portfolio became so big that the only way to exit then was through a REIT, because no one was willing to buy billions of dollars of assets from us. So, tell us how PE funds, came about working with the regulator, and why did they need a REIT?
Yeah, so that's a great question, Kunal. So if we both were together in this, but about 2006 is when Blackstone set up its real estate unit in India.
Yeah.
But interestingly, they made their first significant investment only in 2011, and that
Yeah.
is the time when I joined Blackstone, and they took 5 full years. And I think what global PE investor and Blackstone being the first mover, they saw huge growth market in India. They saw commercial office space starting to take off in
Yeah.
the sense it was no longer the call center kind of demand that India was seeing.
Right.
India was coming up the curve on the kind of global companies who are looking to set up shop in India and the kind of work that they're trying to do in India. And that's why I believe they started to invest in India at that point in time. The
Right.
market was very fragmented.
Yeah, it was.
The institutional quality assets were very few
Yeah.
and far between. And I think the private equity investors saw an opportunity that can we institutionalize the market?
Yeah.
Can we get a lot of capital, get the best practices, whether it's design, whether it's financing, whether it's global customer relationships, and can we scale up the portfolio?
Yeah.
Over the last decade, if you see from 2011, since Blackstone made the first investment, one, we have seen a lot of other global sovereign wealth funds and private equity firms setting
Yes.
up shop in
Yes.
India. And two, you see a lot of institutionalization that's happened on the office side. And
It has.
you're seeing the same thing happening now in the residential, retail, and also logistics.
Right.
front. So I think the private equity guys really showed up with capital, but also with best practices, and really transformed the way commercial real estate is viewed in India. And that also kind of coincided with the way India saw the offshoring trend happening from the global companies trying to take space in India.
Right.
So I think they have been instrumental.
Yeah.
And as you said, REITs were a potential way for them to exit. One, liquidate the investments and exit over a period of time, simply because they had put in billions of dollars. And, to find someone else who's going to buy would be very few in India. While with such a huge population and with such under-penetrated retail investment kind of products, I think REITs are perfect product where it enables a retail investor to get access to commercial REITs. Again, it's liquid, it's tax efficient, it's well governed, it's professionally managed. So best of both worlds. And I think that's what led to them looking at REITs as a potential option as they look to exit the portfolio after doing all the bulk of the hard work in creating a wonderful portfolio.
Right. And that's what the regulator liked as well, right? Because the regulator was not really bothered about Blackstone exiting and so on, but they also saw an opportunity to give retail investors, like you said, access to this asset class and make a more efficient market for real estate, which was kind of a largely illiquid asset class till then. So what was that their thinking in bringing about these regulations?
Absolutely. I mean, I would say anything which is governed, it's better than what's not governed.
Right.
SEBI obviously did a commendable job and went a lot ahead in terms of the norms that it had put in, whether it's related party, whether it's a distribution as a percentage of the free cash flows, how much you need to do, the frequency of distributions, what could and could not the sponsors do, sponsors commitment, minimum investment. So I think what that has meant is it brought in a lot of transparency and regulation in an otherwise unregulated real estate market.
Right.
And what that means is also from an investor perspective, what are they doing? They are investing in real estate investments which are like participating in by buying a share of any other industry. That's the same thing they're doing by purchasing one unit of a REIT. Now, if you think about it, because it's liquid, it's listed on the stock exchange, you can put as little as 300 rupees and as high as few hundred crores. And instead of buying a piecemeal floor in one city, in one building, you now get access to, let's say in Embassy REIT's case, 100 buildings spread across 4 cities and about 45 million square feet. So the amount of diversification, the amount of risk that you're taking is significantly beneficial and better from a risk return profile than what you would do in an individual property.
That's a great point, because otherwise you would invest your 2-3 crores in a floor which maybe the tenant is a law firm or a chartered accountant. During COVID, they are the first ones to leave. Great C building, great D location. But here suddenly you have you put a lakh, but you put it in some of the best buildings in India. You have tenants like Microsoft and Google, ANZ, I mean, you name it, right? So it's a great way to participate in a portfolio of high quality buildings with high quality tenants at a fraction of the price, which worked great for retail investors, I guess. So that's what SEBI saw in while they were trying to regulate this industry.
Absolutely, and I'll come to it in some time, but the quality which you mentioned, both of the properties and the occupiers, that matters a lot, because end of the day, REIT is just a structure, a product which enables them to access the underlying assets. And what larger companies, global occupiers means is that they have higher propensity to pay higher rents.
Exactly.
And what retail investors get is they get an opportunity to share a piece of that action.
Right.
Because let's say a Google or a Microsoft is not going to individually lease out 5,000 or 10,000 square feet if they buy a startup floor. They need huge spaces, let's say 500,000, 800,000 square feet. And hence the REIT pretty much made perfect sense. One, obviously there is regulation. 2, there is liquidity. 3rd, there's a professional body which is managing it day in and day out. That's the only thing they do. So, that's my only job. And 4th, I think also there are huge tax advantages, and we can come into that, but dividends are fully tax exempt for REITs, and that's a huge advantage from an individual investor perspective.
Okay. But are they not tax exempt for equities as well, or is only for REITs?
So equities still pay dividends. So from a REIT perspective, any distribution which is in the form of dividend, REITs have 3 different components. But without overcomplicating it, the dividend component of the distribution that's paid every quarter, that's fully tax exempt.
Free.
And that's huge because typically the REITs would say about 70-80% of their cash flow distributions in the form of repayment of debt, we call, as well as dividends. They don't have any tax incidence. And, so the post-tax yield
really high.
It's very high from a retail investor perspective.
Okay. Now let's talk about the listing itself. I know it was a big affair, the first listing, you were right in the thick of it. How's your experience, road shows, and then meeting all these investors and then trying to raise money? Was that must have been a pretty satisfying and exciting few months?
Absolutely. It was a hell of a roller coaster.
Right.
So we started sometime in September of 2018. Just as a context, we listed in March 19. So It was about 6 months. And initially, of course, we were trying to gauge the mood and, what are the international investors looking at. So a couple of clear things, Kunal. One, it was obviously a phenomenal experience.
Yeah.
But we noticed 2 or 3 things. One, global investors, they understood REITs pretty well. Of course, it's a very established asset class globally. But they just wanted to understand how does India offer that opportunity given the currency risk. Why is Indian REITs a good opportunity if it's only about a yield story?
Yeah.
I mentioned if it's only 8% yield that Indian REITs are offering, then why should they be investing in India given the currency depreciation? So we put a lot of effort to explain that India also offers growth.
Yeah.
And they clearly got it that India is a growth market, but just to help ensure that they understand how does that growth translate into numbers.
Right.
That took a lot of explaining and took a lot of effort.
Right.
2, obviously, all of them understood that low cost and the talent scale benefit that India offers. So our pitch was that the REIT is not a real estate play.
Yeah.
The Indian REITs are a play on the tech talent.
That's a very interesting.
Technology talent of India, because the global companies are coming to India not just because the costs are low. They're coming because they have the talent here in India who can do those sophisticated jobs that they are looking, whether it's product engineering, whether it's R&D, whether it's data analytics. So that was interesting. So that's the global investors. Indian investors actually, even more interestingly, they had not that much awareness of REIT as a product. So if you see initially also in the IPO of Embassy REIT, there were a lot of global investors who showed up.
Right.
Retail investors and domestic institutional investors, while they showed up, was not as high in proportion compared to global investors.
Right.
Now fast forward 4 years to today, we see significantly the participation by domestic institutional investors has grown.
Right.
Plus the retail investor base in the last 4 years from IPO to today has grown 18 times for Embassy REIT.
Okay.
So I think it was a great experience.
Right.
When we set up at Embassy REIT, our objective was to obviously govern it to international standards.
Of course.
So we put a benchmark to some of the best run global REITs on our disclosures on how we kind of conduct the business. And end of the day, I think one, it was a very satisfying experience raising that money in a challenging environment at that time.
Yeah.
And 2, setting up the first of its kind REIT in India and the first product. Where, as you mentioned, regulations, there are always new things that come up.
Yeah.
We had the first mover advantage, but we also faced a lot of unknowns.
Of course.
And it was very satisfying to kind of go through that journey.
Great. And how did you transition or make that decision to go from Blackstone, huge, as we both know, a global real estate investment manager, the biggest, managing billions of dollars of real estate. How did you decide, okay, this is something that I would want to do now and move into the REIT?
Yeah, that's a pretty interesting story. So let me tell you this. So when I joined Blackstone, I thought I kind of pretty much got super lucky because before that I was part of this residential real estate fund and saw the tough 2008-2009 global financial crisis period. So when I got hired, I'm assuming I got hired given the experience of resilience and just seeing tough times in terms of investments and how they pan out. And just joining when they were buying the first office property, I knew nothing about office, what is an office property. And within 8 years, Blackstone actually from one asset, it acquired roughly 55 properties. So from 0 million square feet, by the time I moved into Embassy REIT, we managed about 165 million square feet. So roughly 1/3 of India's office stock. So we really had large scale, 7 big platforms with developers, good, very well-known developers. So the going was pretty good. But I was kind of getting edgy and getting bored a bit. And I went up to my senior and I said, I need something more challenging. And the first reaction was, are you crazy? You're kind of managing one of the largest portfolios in India.
Exactly, yeah.
But I was like, but yes, it's great. It's been very satisfying, but I wanted to do something more challenging. So when the REIT thing came up, and while we were part of the REIT formation and all the stuff that was going on from Blackstone investor perspective, I think both the developer as well as Blackstone said, here's an opportunity. Do you want to run the REIT? And it took me 30 seconds to kind of decide.
Of course.
I was like running a listed company, first of its kind in India, and starting the journey all over again.
Right.
I knew it would be a lot of hard work. In hindsight, I underestimated it. It was even more hard work than I thought. But I just took 30 seconds to decide. I thought, it's a phenomenal learning opportunity.
Of course it is.
And then obviously I moved my family and myself from Mumbai to Bangalore, because the only way to run a company with a lot of employees looking up to you is to kind of be there in person. So, and the last 4-year journey, Kunal, just to give you a brief, obviously the IPO fundraise was fun, but post IPO also, to run it as one of the best governed REITs took an effort. There were no precedents. We had COVID. So that period was pretty tough. People ask us, how is the business and is it resilient? We said, once in a 100-year event that could happen, which directly impacts commercial offices, which is everybody stops going to office. That's what happened to us. But you know what? We still collected 100% of the rents.
Exactly.
Our bottom occupancy was 86%, and we distributed 100% of our cash flows. So we did fairly well. But that was an experience. I remember. One evening, once the COVID hit, we got 85 legal notices or requests of rental waivers from occupiers in one single day. And we had about, at that time, as a context, about 160 occupiers. So half of them just one day. So we have managed through that. The business was pretty resilient. In fact, in the middle of the Delta variant, we acquired Embassy Tech Village.
Of course.
10,000 crores and from our own promoters. So, a lot of people were, why are you acquiring office asset in the middle of, Delta COVID variant? And, we had to raise about 10,000 crores equity and debt to do it. And while there was a lot of skepticism, we kind of won. We were successful in explaining it to our investors, got 100%, close to 100% vote. We raised that money. And if you look forward 2 years, since we acquired, it's done really well. We have actually overperformed on what we committed to the market. So it's been a pretty satisfying journey. And of course, from a regulatory perspective, there are always some new things that come up. And how do you navigate that in the context of retail investors, whether it's taxation, etc. I think it's been a hell of a journey.
And the Embassy Tech Village, obviously, that's where the investment manager stands out, doesn't it? So independent manager. Those are the calls you take in a market which is quite bad. You go against the grain of thought and then say, look, this looks like value to me. And yes, right now people might think that this is not the greatest of acquisitions, but the pricing justifies this. And those decisions, when they turn out well, are extremely satisfying to someone like you who have obviously led the whole investment.
I mean, when I look back, Embassy Tech Village was one of the most satisfying things over the last 4 years, not only because everybody was saying, why are you doing this in the middle of Delta variant? We could see the resilience of commercial office. And we knew that this was a stellar asset. In my view, one of the best assets in the country.
It is.
And you only get those opportunities certain times. Obviously the sellers sell it if they have some other, considerations and reasons to use that cash flow. And this was a situation where we had to negotiate with our own promoters. Right? Blackstone and Embassy both were selling, and they were third-party landowners. So it made it very interesting, and we, with our own promoters, we were like, no, but we would want a lower price, and they were fairly respectful of that, I would say. And if you look back, despite all the concerns that were raised at that point in time, the support that we got from investors was great. And if you see the asset performing today, we are doing 2 million square feet in one shot construction.
I've seen
building
some
a 518-key hotel. So that's a gigantic construction site, but the numbers speak for itself, and it's been very satisfying.
How big is the square footage of Tech Village now?
So it's about 10 million square feet. Wow. When fully done, it will be about 12 million square feet. So really huge. So 12 million, 120 lakh square feet. It's really huge, with a lot of captive centers, global banks as occupiers. So we see it very steady. Even during the COVID period, the bottom occupancy was 98 or 97%. So you can just tell our asset.
To give you a context, when we bought Embassy Tech Village back in the day in
2014.
Blackstone, it was 1.2 million square feet, and there were only 4 buildings in front, and it was mostly land. And when we first there, it was like muddy, and there were a bunch of landowners which we had to work with. Of course, you remember. And then, but the way that particular asset has grown today, and we only see the buildings in front on the road when we pass through, the new Wells Fargo building or the JP Morgan building that's come up. Just the quality has changed from when we bought. The first building itself was, I remember, LEED Platinum building at the time. We had never seen or heard a LEED Platinum. to today, just it's a massive transformation of that
Absolutely.
park.
And it's a delight to see
It is.
raw land and getting converted to really high quality, global standard real estate. And that's
exactly.
just a delight.
Yeah, I mean, we used to bring all the foreign Blackstone guys in, and they used to just come and they used to love Manyata Tech Park, even Golf Links, and Tech Village was the one it really stood out. They loved the infrastructure inside and the way the roads and the landscaping was done. It was just, and now of course it's kind of even better. And you've seen the whole thing built out from land, like you said, to what it is now. You talked about a little bit about SEBI's regulations and so on. And from 19 to now, how have these regulations kind of changed? Have there been a lot of changes, all positive? Has the regulator been proactive? What are the big changes that have happened since the listing in the REIT industry?
Yeah, so I'll be honest here. One, a new product, especially in an emerging country like India, some teething issues were to be expected.
Of course.
So it's been a journey. Having said that, we were the first mover. So we knew that, there would be certain challenges as we go on implementing some of those regulations that has been put in. But I must say that the regulator has done a fantastic job in just setting it up and getting it off the ground.
Right.
And over the last 4 years, I would say they have been fairly open to ideas and they've listened to the industry.
It's flexible.
They have been reasonably flexible. Of course, they have a tough balancing act of protecting the retail investors' interests as well. On one side, and second side is obviously ease of doing business for us. So I think overall it's been good, Kunal. I definitely would want to say that there are always hiccups along the way. So, for example, there were certain tax amendments that we made. I mentioned dividends were fully tax exempt, but there was an amendment in between a year or two back where they were made taxable.
Okay.
And of course, the retail investors and global investors were like, certainty of and visibility of taxes is something very important to us. So we went back to the regulators, saying, we set up the REIT, promising the investors
the tax efficient vehicle.
It is a tax efficient vehicle, so you can't tax it. And they were kind enough to listen to that and then reversed it.
Oh, that's great.
And again, there were some other changes last year. So all in all, I would say it's been a journey, but I think in a new product, you expect this to happen.
Yeah.
The good news is because the retail investor base has grown, the markets and the regulators also see that this has huge potential as a product.
Exactly.
And hence, what could we do to improve liquidity, to improve transparency? And I think if the product is well governed, it's good for all parties involved, not just from an investor perspective, but even from an operator. Because if you really rated highly on the way it's being governed, you'll get more investors. So I think it's been a journey. I think people have to be patient, but it's been overall positive.
Okay. And just talking about the underlying asset class, I know we touched a little bit, the real estate itself. Why is it so important today to have commercial real estate REITs in your portfolio, along with equities and fixed income? Why should an investor buy a REIT or commercial real estate?
Yeah, so I love this question. So I'll break it into two parts. One is, why should someone look at or buy commercial office space in India?
Right.
And second, why is REIT the right vehicle to access that opportunity?
Right.
So, on the first one, about 6 or 8 months back, we had gone to a global real estate conference in New York. And that is the first time it struck to me that office is a bad word in the US. Because, we are from an Indian context. We see that business has been resilient. Of course, the lease signing and new deals have been pushed out. But we keep seeing demand from big companies. And we realize that, a lot of global investors come with that context in their mind that office is
in general in a bad state.
It's in a really bad state globally, especially in the US. So I would say India is very different. Simply because I mentioned earlier that India has dual structural advantages.
Right.
One, it has low cost. I mean, the not just the rent cost, but also the people cost would be about 1/10 or 1/7 of what you could get a similar quality person or resource in the US, let's say an engineer. So costs really drive home the fact that India is well suited. Second, I would say is that India has what globally people are facing a challenging, which is a talent pool. Right? We see aging demographics everywhere else, and in India, the average demographic of people working in our business parks is about 25 to 38 years of age.
Okay.
It's a growing population of young engineers, young STEM talent, as we call it, science, technology, engineering, mathematics.
Right.
So this dual structural advantages really place India very well. And also what we've seen, Kunal, is early 2000s when we saw call centers being set up till today, more and more large companies globally are offshoring work to India, not outsourcing. They're offshoring, which is they're setting up their own centers in India, whether it's a JP Morgan, whether it's a Morgan Stanley, whether it's a Google, all the large companies you name, they're setting their own centers in India, and they have the same quality standard in terms of the way the premises should look, what they would have anywhere else globally. And that is bringing a lot of demand for high quality office spaces in India, as we spoke about it earlier. And also the second thing which I'm seeing is any recessionary kind of concerns that you have globally, which is the case today, whether it's in Europe, whether it's in UK or in US. That means that the companies are looking to optimize further.
Yeah.
And when they look to optimize costs or efficiency, they offshore more work to India. So I think India office is in really that sweet spot. Morgan Stanley in its recent report said, offshoring is one of the key mega trends of this decade for India, and India will benefit. And we actually are seeing that in India.
You've seen that firsthand, I guess.
We are seeing that firsthand. Of course, the lease signings and deal momentum slows down in a quarter or 2 quarters because the US is still, the corporates are still not taking decisions. But if you see from a 5-10 year perspective, I think it's a tremendous opportunity. Again, it is in those cities and pockets which are high quality. So I think I would just caveat with that. So I think, that is one area I would say, commercial real estate is an essential part of any one person's investment portfolio. Now coming to how do you access that opportunity? India obviously offers growth, a lot of large companies coming to India, space is always limited, supply is actually declining, and we'll cover it some time that because of all the challenges that you see on financing, market dislocation, rising interest rates, the upcoming supply is declining, which means the rent's actually going higher, which actually works very well from a landlord perspective.
Right.
Now what REIT does is it offers to access that commercial real estate growth story in a product which is very accessible. So you have 300 rupees, you can just go and buy one unit of, let's say, Embassy REIT or any other REIT an individual investor likes, and you can exit at any point in time.
And participate in this offshoring story.
Participate in this and have access to it both in a liquid form, a professional management team who's managing it. It's governed by SEBI. All the protocols on minimum distributions, related party checks
grievance
and balances,
mechanisms.
There are grievance mechanisms. So I think it's a very easy way to access real estate without having necessarily the risks associated with owning, individually owning office property.
Right. You spoke about Morgan Stanley and JP Morgan and all that. I mean, some of these guys have the biggest offices today in your parks outside of the US, right? So, I mean, tell us some stats about how these guys have just expanded in the country over the last 10-15 years, especially in Bangalore, Hyderabad, Gurgaon, these tech hubs.
Yeah, I'll give you 2 interesting examples. I'll not mention the names, but one is a large Australian bank.
Right.
They came up and set up their shop in India during the first phase of the COVID pandemic. I think they had started their assessment pre-pandemic, but by the time they finalized, so they started with a very small space with us. And let's say, just to throw some numbers roughly, let's say they occupied about 50,000 square feet.
Okay.
So let's say 300 or 400 people, employees. Through the COVID period over the next 1.5 years, they more than doubled down the space just during that period. And today they're looking at about 1 million square feet RFP live in the market today. So just 3 years.
And this is because just they're offshoring more business?
What happens is a lot of these large occupiers tip their toe in water when they come to India. They see that offshoring story works well, the costs are low, efficiency in terms of the Indian STEM talent is pretty high. And then they try and offshore more and more work to India, and they go up higher in the curve in terms of the sophisticated nature of the work.
Right.
So it starts with more IT, it starts with business processing, and then they go up to R&D. Some of the large German manufacturers are doing high-end research on the car models in India in our parks now, and they do all of that. So they kind of continue to offshore more and more work in India. The cost-saving mandate and also the speed, efficiency, and the automation all help India's story, because India can offer all of that and more at much lower cost. The second example I would give is, one chance conversation I had 4 years back with the India CEO of a large global pharmaceutical company.
Okay.
And I said, why are you in India? Why are you in Hyderabad? Those guys were in Hyderabad. And I was like, would you not want to be anywhere else? So he, 2 things. One, he mentioned that India is a second home country.
Right.
So for a lot of these large global companies, India is a second home strategy.
It is.
It's not just one of the locations they're offshoring, but it's a core to their overall strategy. So he said, we currently have, let's say, about 50, 70 PhDs who are doing some kind of research work from a pharmaceutical perspective. But he said the goal is over the next 2-3 years, we build about 800 to 1,000 PhDs.
Wow.
And he said, where else in the world could we hire 500, 700 PhDs?
That's an amazing example.
In let's say, a year's time.
Yeah.
And that only India can offer. India has the education institutions. They have the young talent who are, really, raring to go.
Yeah.
And that's why the occupiers in India. And this story we have seen play out many number of times. They come to India, set up a small shop. We always tell our occupiers that factor for the growth, and you'll be surprised by the own growth that you're seeing. And the model really works.
Right. Now coming to commercial real estate itself as the industry, what is it that you're seeing right now in terms of, you mentioned a little bit of a slowdown in the last few quarters, obviously that's expected given where the West is as well, but in terms of rent, supply, absorption, and Bangalore versus Hyderabad or Gurgaon, what are your views going forward?
Yeah, a couple of things, Kunal. So one is there's no compromise on quality. I think if you want these global companies to come to India and take up space, and by the way, these are the guys who can pay higher rents. They have because the rents just don't matter. I keep saying that in India, the rents are still embarrassingly and pathetically low.
Yeah,
about $1 a foot a month, right? It just doesn't matter in the overall scheme of things, because a lot of people ask us, does India office rents have the runway to keep growing? And I'm like, yes, it does have. Because if you see in Manhattan, the rents are $50, $70 a foot a month. Singapore would be $15, $20. India is just $1 a foot a month, even in the best micro markets.
Yeah.
So I think one very important is quality. I think there's no compromise both from a location perspective, access of infrastructure, how can people, access the park and commute. And two is obviously the quality of the building itself. Right. ESG is a big thing, green, and all the stuff you mentioned about amenities. So I think that's very, very important factor. Second, I would say a lot of people kind of think office is homogeneous. It's not. Not all office buildings, not all office cities are the same. And that's why you need to leave it to a specialized operator. Some markets are much better than the other markets. And you need to kind of ensure you see through ahead of time, simply because the gestation period on any new building is 3 to 4 years.
Right.
So I would say, if you see just from a city perspective, we have traditionally stuck to six of the top cities. Bangalore, of course, but also NCR, Mumbai, Pune, Hyderabad and Chennai. Embassy REIT operates in 4 of those 6 cities. I would say Bangalore is the best office market in Asia, not just in India, simply because it has about half of the global captives or the global companies are in Bangalore.
Okay.
Half of India's STEM talent is in Bangalore.
Right.
It's a staggering statistic.
Yeah.
And 2/3 of the RFPs, I mentioned that the leases, pipeline has slowed down, and I'll come to that. But 2/3 of the pipeline is in Bangalore.
Okay.
And Bangalore is the largest market in terms of size within India. So I think Bangalore obviously head and shoulders above all the other markets. However, other markets, especially Mumbai, Hyderabad, and Chennai, have also shown really good prospects.
Okay.
Pune, we have seen, is a little bit slow today.
Right.
But I think it's again very specific to the property and micro market. All in all, I'll say that fundamentally the question to be asked is a global company, whether it's a Google, whether it's a Microsoft, whether it's a JP Morgan, are they going to be able to find the talent in the micro market, in the city and the property that we are offering to them? If they can hire the best quality talent, they'll take the space. So the question to ask is always, when we look at acquiring new properties or building newer buildings within our existing properties, is this a product offering that global occupier would want? Is this the right location? Does the talent have easy access to the property, infrastructure, are the schools around? Because the whole social infrastructure is very important. And if that is the case, they would just take up, because rents are a very small, maybe 3 to 5% of the overall cost base.
Right.
And talent is the core to their.
That's more important.
That's more important.
That's why during COVID, nobody really cared about leaving buildings and so on, because for them that was not important.
Not important at all. And added to that, interestingly, Kunal, we've also seen rents growing now. Bangalore has grown by 5 to 8% over the last 3-4 quarters in the best micro markets.
And is that just supply or just?
It's just two things. One, quality supply. Quality supply is not available. and two, because you see so much of inflation. Interest rates obviously is going up. That means supply is coming down. It's become harder and more costlier both on construction cost and on financing to construct new product. But just because surely the inflation has gone up, it also meant that there's rent inflation. So inflation also has a positive effect in terms of the rents continue to grow up. Inflation may hopefully come down, but the rents will continue to kind of go up once we set at those
just
levels.
The replacement cost, I guess, has gone up. That's what you're kind of also trying to say, right? The
exactly.
same building today costs 30-40% more to build than what it was 3-4 years ago. Because of labor, inflation, because of interest rates going up, and just land costs going up and so on. So that's kind of what is ultimately going to lead to higher rents, because then no one will build for those costs anymore unless the rents go up.
It's very hard, exactly. And what that means is, one, it'll lead to consolidation. So fewer players who have scale, who have the balance sheet strength, will continue to construct and build new product. Also, more importantly, operators or landlords who already have existing built up space, that becomes suddenly far more valuable if it's high quality, simply because an existing asset is worth more than what a new asset which is going to be produced at a higher cost.
And in terms of absorption, we've seen 40-45 million square feet being absorbed every year. Last year was like the biggest in 10 years, 45-50 million square feet. Bangalore takes up almost 12, 13, 14 million of this. Do you think that that's a trend that's going to continue for the next year or so?
I think if you take a 10-year view, definitely, you'll continue to see absorption going up. I do think that over the next 2 to 4 quarters, we will see a slowdown in terms of the lease signing. While, the businesses have grown, occupiers keep telling us they're offshoring more, but I think there is a bit of hesitancy in signing and making capital commitment because they have to spend their own monies in furniture. So I think the next year may see similar numbers or slightly lower, but I think it is going to be a steady upward trend if you look beyond the immediate 2 or 3 quarters. And that's simply because, again, India office market is about 650 million square feet. If you compare that to Manhattan, in the whole of India office market would be, in terms of size, would compare very favorably, one. And two, again, the best benefit is the cost. A world where there's so much of macro uncertainty, everybody wants to lock in efficiencies and lower costs.
Right. So, I mean, now, you've run the REIT for so many years. We've seen 3, the 4th one coming up. What do you think is next for this industry in India going forward? Are there going to be lots of REITs coming up? I know SEBI came up with mini REITs and so on. What's your view of where this industry is headed, also given your experience on global REITs, how they've moved? What's your view there?
Yeah, so I mean, just to take India's example, just in the last 4 years since we got listed at Embassy REIT, we have distributed close to $1 billion in distributions.
Wow.
And that, by the way, 2 years of that was in pandemic, once in a century pandemic, which directly impacted office properties. About 7,800 crores we distributed.
Wow.
So I think retail investors now understand that REIT is a very good avenue for them in terms of the overall allocations from a portfolio perspective. REITs have been very resilient. So that's one. We've also seen a lot of domestic institutional investors now participate, whether it's mutual funds, whether it's insurers, they've started participating in REITs. So I would say in general, we will see more and more REITs being set up in India as the market, and that's a sign of market maturing. That also means there'll be higher compliance, there'll be higher quality properties, whether it's retail malls, whether it's office, and hopefully someday logistics. And of course, that also means better wellness-oriented ESG stuff from an employee or end user perspective. So I think we are going to see that, and I think from an investor perspective, it's great because they have the option to then select managers with different property offerings and with different styles. Someone would want to be more growth oriented, someone want to be more conservative and be focused on dividend. And the retail investor gets that opportunity to pick and choose which managers they like the best from an active investment perspective. So that's one. Globally, if you see, apart from the standard, what we would understand REITs, which is commercial offices, residential in the US, logistics, and also let's say retail malls, all kinds of properties, participate in REITs. So, we have got all kinds of REITs in the US, and I was very fascinated to it when I started my journey on understanding the global REIT market about 3 or 4 years back. You have got casino REITs in the US. You have got telecom cell tower REITs in Africa. You have got net lease, you have got grocery anchored retail malls. So basically anything which offers steady, predictable cash flows and which has large you can offer in terms of volume or in terms of scale, you can form a REIT. So I think India will also follow that. Of course, India has just started the journey, but globally, it's fascinating to see you can participate in farmland REIT. So just operators would just buy farmlands and grow crops on that and give a fixed yield. And of course, land is always precious, and you sell that for profit at some point in time. So I think it's phenomenal to see. And again, this is not just across real estate segments, but also across countries. UK and US are obviously the two key markets, but you see all kinds of REITs in Singapore, in Australia. You see scale operators in Canada, in Germany, in Africa, as I mentioned. India has just started on the journey. I met somebody recently who's looking to start a REIT in Pakistan.
Okay.
And I just think it's great from an investor perspective to access real estate in a liquid form, and I think this segment will grow.
Right. So India right now has been only in commercial, now retail. Over time, we are going to go into hotel REITs, hospital REITs, and warehousing REITs. Every asset class that has an underlying predictable cash flow can be REITed out, and that's something we are going to see. And that's how even the journey in the West, I guess, kind of went about it. They started with an office REIT, and then slowly people realized, look, this is something that can be replicated.
The model works.
It works, and I mean, it depends on. Let's give the option to the retail investor to choose where he wants to. And finally, I mean, in terms of investing in commercial real estate in general, we say that in a high inflation, high interest rate environment is when you get best value in commercial real estate, because values go down, they are trading below NAVs, and when interest rates are higher, the yields also go up, but then interest rates don't stay high forever. Inflation does finally come down, and at that point of time, if you end up buying REITs, publicly traded, well managed, high corporate governance, good liquidity, with at a good discount to NAV, that could be a very good asset class to invest in for the investor today.
I mean, so a couple of things. I absolutely agree. Interest rate rising, what has that done is globally all investors have painted the REITs with one brush stroke. And that's why you see REITs today are trading at significant discount to the net asset values. And why is that? Because they see primarily outside of India, they see it as a yield product, and they see, okay, we're getting 6-7%. But by the way, interest rates have gone up from 0 to 3% in the US, or 3.5%, and obviously it impacts the yield. But interestingly, what's also happened at the same time, as I mentioned, supply goes down, and some of the businesses have been fairly resilient, so they have been able to charge higher rents to its customers, and hence the yields have not been impacted. In fact, what it's done is it's provided some of the global REITs dislocation opportunity, where they can kind of really acquire other high quality properties which have otherwise not been available. And everything is obviously, nothing's permanent, everything is temporary. So the phase of growth and interest rates tapering down, we're already seeing and hearing news of interest rates likely to taper down by the end of the year. The way I look at it is, obviously from an India perspective, the REITs are trading at significant discounts to NAV, anywhere between 15 to 20-25% office REITs, and we see momentum in office building up. It's a long-term opportunity. But even globally, Kunal, I mean, buying liquid real estate, because buy a share of the unit, which is well governed, professionally managed, and most importantly, conservatively financed. We are not talking of leverage of 60, 70, 80%. Many of these REITs, you'll be surprised, are very conservatively financed, about 30-35% globally, right? And buying them at 70 cents to a dollar, or 65 or 75 cents to a dollar, at a discount to the NAV, has always been a winning proposition on real estate. So I actually see the global real estate REIT market as a good opportunity today, in terms of, one, the diversification it offers, not only the segments, so what kind of REITs, whether it's office, industrial, we have got self-storage REITs, for example, but also the geographies. And today, given the rising interest rate environments, the prices are pretty, the stock prices have really been impacted, and that's why you can access these opportunities at 30-40% discounts to the intrinsic value. And I think that's a phenomenal opportunity. Both what you see in India, in the US and other regions, you actually see even more of a disconnect.
It's almost like the Embassy Tech Village kind of a moment, right? Where you see a dislocation, and then you kind of act on it and go ahead and buy this portfolio of high quality global REITs trading at a significant discount to their net asset value.
Absolutely. And Kunal, end of the day, we're buying hard, tangible real estate. So we're not betting on a tech company where we are hoping that a 30x or 40x kind of a valuation on sales is what will, or on earnings that will help us make our money. Here you're buying hard real estate which is discounted. It's as simple as that, and you're not buying a random building in one city of the world. You're buying shares in operators which are scale and which own many buildings within their portfolio, so you really get diversification.
Right. Great. I think very instructive session. Thank you so much. I myself learned a lot about REITs and the whole journey that you've had. That was fascinating to see. Of course, all the best, and I'm sure you will go to higher things from here.
Thank you, Kunal.
And I've always known you to be an extremely hardworking and intelligent person. So with all this experience behind you, I think you'll kind of go, you'll do even better. So thank you so much for
having me over.
For coming here.
Fun. Thank you.
Great. Thank you so much for joining us. And then and we'll see you next time with another guest on another topic on the PropShare podcast. Thank you so much.